You want to know what are the best stocks to buy now? I've got you covered with 7 top stocks to buy. Let's go. So these 7 stocks are the top stocks to buy. These are growth stocks, $10 billion market cap or larger, and they have to be tech. And putting heavy weight on things like growth and improved profitability. So those are the filter parameters. Let's dig in. So today we're using Seeking Alpha's stock screener tool. Now, just because a screener says you should buy a stock, you don't just buy a stock because the screener says it's a buy. What this will do is give you ideas to look for. So this is really exploration, and let's talk about each of these stocks just at a high level today. So we're going to go in reverse order and show you the 7th pick first, and that's going to be First Solar. The ticker is FSLR. So this stock is up about 46% in the past year. Year to date, up 14%. Just a quick glance here, you can see the forward PE is about a 15, short interest around 4.5%. This is a $21 billion market cap. The profitability metrics look decent. Seeking Alpha showing a B-. Growth here, A+, showing a 29% forward revenue growth. And that valuation, forward PE 14.53. You can also look at things like price to sales. So the TTM is a 5.67. That forward is a 4.84. You can see like a lot of these stocks, it washed out towards the end of 2022, early 2023. This is a $129 stock, ripped all the way to $306, and now it's trading below $200 a share. Now this support 3 Fibonacci 177 didn't quite get there. It is below that 200-day moving average, that purple line. So we looked at valuation, looks attractive overall. Looking at technicals, looks like a possible opportunity. What I would do from here is explore the stock more, go to investor relations, do a ton of research and due diligence from here. Up next, at number 6, we've got Micron Technology, ticker MU. Now, Micron has come way off of those highs, $157.54, that 52-week high. It's now $104.80. Over the last year, it is up about 58%. Year to date, about 22.8%. This does pay a small dividend, so in that DJI, DJIF category, 0.43%. Has 3% short interest. Market cap on this is about $120 billion. This is more of a mature company, A+ profitability grade. You can see that gross profit margin and other numbers. The growth on this, it has started to accelerate again. That's why you're seeing the stock starting to recover a little bit here in recent months and days. And the valuation on this, 154 is that TTM, but that forward gap PE is a 13.66. Price to sales, look at the forward, is about a 3.14. And you can see the ratings here again, not a reason to buy necessarily, but the analysts on Seeking Alpha have a buy. Wall Street analysts, strong buy, and that quant, and it's using a combination of this as well as other variables when we're using that stock screener, but that's a 4.36. So it's using those numbers as well as the valuation, the growth, profitability, momentum, all those different things when it's trying to tell you which stocks are favorable. Looking at a chart, this thing was $157, and we talk a lot about trend lines. We had this trend line and it was out here and really in no man's land. This is like a bubble, right? And so oftentimes it comes back to reality. It comes back to earth. It doesn't have to go to the trend line every time, but oftentimes it does. So you've got this air pocket basically here, and we were saying, hey, this is way overextended, not where I want to buy. Don't touch this at $150 a share. And the opportunity recently in Discord was under $100 a share. It is in that 105 range. Of course, it was 85 not long ago. But again, that screener is there as an exploration tool. So we look at the valuation, looks attractive. We look at the technicals, it looks like an area that might be attractive to buy. Those are just 2 small steps in the greater decision to buy a stock or not for your portfolio. And you have to do a lot more research than just looking at the screener and a couple quick metrics. You really have to understand the business because again, if you're buying a stock, you're owning part of that business. You want to understand the leadership, the competitors, the direction of the business, and so on. But so far we've covered 2 stocks, and I'll tell you that both warrant additional exploration, I think, for a lot of people. They may or may not be buys for you, but they look like they're possible opportunities. At number 5, we've got Seagate, ticker is STX, and you can see some of the numbers here. $21.43 billion market cap. It does pay you a 2.76% dividend yield as well. Seeking Alpha shows a profitability grade of C+. The growth on this is at A+, again, according to Seeking Alpha, and that's going to include not only revenue growth, that forward revenue growth is 12%, but it's also going to give you things like EPS diluted growth and more that you see on your screen. The valuation on this is a 16. This This is a gap PE forward 16.18. That TTM or 12 months trailing is a 26.36. This is an interesting stat here if this is accurate, but the peg non-gap forward is 0.26. It does not have a peg gap. So I'd be willing to guess that earnings have had some volatility with this stock without looking at much closer. That's just an observation. That price to sales TTM 2.93 and the forward price to sales is a 2.32. Looking at a chart like most stocks, right? We've had this huge run up since October 2022. And really a lot of these names have been associated with AI, so they've been pumped higher and higher. I don't follow Seagate as well as the other two stocks that we've covered. And of course, First Solar has nothing to do with AI, but like for example, Micron has been part of that AI play. You can see this 200-day moving average is around $96.47. So it's trading around $4 above that 200-day moving average. And you've got the Fibonacci pivot points. These are just possibilities on the chart, giving an area of where a chart could go. You're looking at around $89. So this is just to give you an idea of where a stock could go. The biggest thing for me is looking at trends, those moving averages. But most importantly, 99% of that puzzle is going to be fundamentals. You're looking at the chart. If you're a long-term investor, we don't use charts as trading. So we're not trying to do day trading or swing trading. We're really just looking at them at the last piece of the puzzle, that last 1%, to get a better idea of where a stock might go, better entry and exit point. And charts are just possibilities. They cannot predict the future. Up next, I'm going to share stock pick number 4. If you're new here, not subscribed, smash that subscribe button, click that bell for notifications. And if this video is helpful to you at all and you like content like this, drop me a like, drop me a comment. Let's get in the algo. Let's get to 100,000 subscribers. I appreciate your support. The 4th stock is TDK Corporation. The ticker is TTDKY. This is a $23.12 billion market cap. Now, full disclosure, I don't know this company really at all. The profitability grade here, A-. Growth is shown at A with a forward revenue growth of 60.54%, which is solid. The valuation is a B and it's showing a forward gap PE ratio of 17. It also has that TTM peg gap of 0.3, which is an interesting number right there. Anything less than 1 is very interesting. Price to sales TTM 1.75, that forward to 1.61. Now the 52-week range on this, huge range, $5.09 on that low, $14.37 on the high, trading right now above $12 a share. Over the past year, it's up 63%. Year to date, up about 30%. So to give you some quick high-level insight of what this is all about, Japan's one-stop shop for picks and shovels tech. Key player in the global electronic components supply chain. There are so many different companies involved with electronics supply chain. I've been following this sector for 25 years and I still don't know all these companies very well. The reason for it, this is Japanese. I typically don't invest much out of the US, and this would be an OTC ticker, which I generally try to avoid. This is over the counter. Of course, you can buy this outside of OTC, like on the Japanese stock market. You're generally going to pay some foreign transaction fees and so on. But this looks like a very interesting stock. Let's take a quick peek at a chart. Again, we're in exploration mode right now. I'm looking at this chart, and this is a crazy looking candle here. I'm not sure what's going on. You can see like a lot of these stocks, ripped in 2022, 2023, came off of these prices that were down here, in $5 all the way to $14. Some huge profits made over the last couple of years. Right now it's trading below the 100-day, that's the red line, the 50-day moving average, these are simple moving averages, that's the yellow. Still slightly above this 200-day simple moving average, the purple line. Now the Fibonacci pivot points are all messed up because of this candle, but just looking at the overall trend, it has come back. Of course, you'd like to see it a little bit lower, something like this. And again, this is this exploration. The charts just give you an idea of where a stock might go. Your fundamental analysis, that 99%, should give you an idea of what you're willing to pay for a stock. The chart's there just to simply show you, is it running hot? Is it pulled back? Is it an opportunity? Better entry and exit points. Now, before we get into the top 3 stocks, and number 3 happens to be a Fired Up Wealth favorite since it went IPO in September of 2019 at $15 a share. Any guesses? Before we do that, if you want to be a better investor, there are 2 things that you can do. On this video, there's a pinned comment. It has 2 links. One link is going to be to Seeking Alpha. So if you're looking to sign up for Seeking Alpha, a premium membership, I'm a marketing affiliate, and I get a few bucks if you use my link. So check that out for the the special offer they're running right now. Most importantly, if you want to be part of an investing community and see what other people are buying, not just me, my buys and sells, all the members in Elite and Investing Trade Floor, what they're buying and selling every single day, as well as tons of information, due diligence, and we do 3 live streams a week every Monday, Wednesday, and Friday morning, which are recorded. We have a free 1-week trial to Elite. No strings attached. Go check it out. Where you want to be. You want to go check that out, see if it's a good fit. Then you want to be in the masterclass tier. New videos on the way. Lots of exciting stuff coming in 2025. Seats are limited. Number 3 is a $30 billion market cap. This is Cloudflare, ticker NET. Now, this is going to fall in that cloud SaaS, software as a service arena, so we're going to look at unique metrics generally for that. This is just a quick exploration video, so we're not going to get into the weeds too much, but profitability here on Seeking Alpha is a B. That growth is solid, A+. You can see forward growth 29%. Where it's going to get a little bit tricky is valuation, because if you're trying to use something like a PE ratio, not going to be the best metric generally for these type of names because of that recurring revenue. So we're going to look at things like EV/NCM revenue. We're going to look at Rule of 40. You also want to look closely at things like stock-based compensation, but looking at price of sales, it's going to be crazy expensive. TTM 20.46, forward 18.43. If you're a value investor, you're going to see this. You're going to say, no, thanks. It's probably not for you. This happens to be one of my favorite stocks. What I own of this is house shares. So I've sold out my cost basis and profits, and I'm just holding some house shares. 52-week range on this, 53.88 all the way to 116, trading right now around $91 a share, up 62% in the past year. Year to date, only about 9.38%. It does have 3.35% short interest. It's showing here a forward P ratio 125. Again, you want to look at something like EV/NCM revenue, as well as free cash flow and others. But just to give you an idea, so out of the stocks that I follow in this sector, this is the 5th most expensive stock behind Palantir, which is the first. The EV/NCM revenue on Palantir is a 35x. I recently trimmed some. I'm still bullish long on Palantir, but it is very expensive here. Trade Desk, which I also trimmed off a few shares. Again, I'm bullish. I still own these companies long. Just took a couple shares off the table. That's number 2 at 22.1x. Samsara, IoT is the ticker. 19x is number 3. CrowdStrike, number 4. Another fired up all favorite, 16.6x. And Cloudflare is about a 16.5x. So again, the 5th most expensive. Number 6 is ServiceNow at a 15. And for reference, the LTM Rule of 40, and we've talked about this in Discord, there's different ways to measure this, but the LTM Rule of 40 is 42%. You want at least 40%. The top stock out of the list of names I just mentioned is CrowdStrike at 65% for that metric. When you're looking at these charts, guys, and you see text in orange, those are previous chart days. We do chart day every single Wednesday, Patreon Discord at 9 o'clock a.m. Eastern. Again, sign up for a free trial and join our next stream on Wednesday. We also do audio podcasts Mondays and Fridays. But with Cloudflare, you can see that it had this recent pullback here. It got all the way to 116, which is really getting ahead of itself. And again, if you look at these trend lines, this trend line, we had this back in October. So this line would have been here, and you're looking at it at $116, thinking, wow, we've got a long way to go. It doesn't mean it has to go to the trend line, but it often does. In this case, it did. It's just a matter of when. In fact, it broke below it around 66. Your opportunity generally is going to be below these trend lines. And right now it's back to 91. So me personally, I probably wouldn't be buying it at this price here at $90, $95. I've been buying it down here, but Seeking Alpha is still showing it as the 3rd best stock on their quant or their search tool. And this is one of those stocks, once it gets momentum, it can do some crazy things in really both directions. Number 2, we just mentioned it when we talked about Cloudflare. It's Samsara. The ticker is IoT. Now, this is a $27 billion market cap. It's not something that I own personally, but several members in Discord do own this stock. I actually like this company. I've just never really found an entry point I was comfortable with. You can see the profitability grade here, C+. It does have this 75%. Of course, software is going to have those higher gross profit margins, but it does need some work. This is one of those stories that's still trying to get to that profitability mode. Growth on it, solid. You know, this is kind of more in that hyper growth type arena, 32% forward revenue growth. This is another one. We just talked about the metrics. So if you missed it, go back, and I covered the metric on this, the EV/NCM revenue. So something like the PE ratio isn't going to be quite as helpful on a stock like this. Price to sales, you know, again, high 22.02, and that's forward. The TTM 12 months trailing is 24.23. This stock has also had a big range, 52-week range, $21.48 to $51.53. trading pretty close to that all-time high. You know, it's around $49 right now. It is up 114% in the past year, so something to be mindful of. We'll look at a chart here in a second, and it's up about 48% year to date. The company's been doing well. The earnings have been strong. And the thing about these high risk, high reward, these high flyer momentum names, as long as earnings crush it, expectations are high, as long as the earnings crush it, the stock keeps going higher. The problem, as you guys have seen, if you've been around for a little while, one little slip up and these type of stocks, they sell off, 15, 20, 30% after earnings. Now, they just reported on September 5th and earnings were strong, which is why the stock's going higher. But we're above the 50-day, we're above the 100-day, above the 200-day. This R3 is up here around $57, $58, and it could certainly get to that level. And this trend line, you can see we broke trend here in June, $27. In hindsight, this is the opportunity. It bounced and kissed the trend line right here at $32 back in August when they had that sell-off. Generally, for me, I like these type of opportunities. These are opportunities I generally like to buy. If I look at it up here, it's way above trend. It doesn't mean that it can't keep going higher. I just typically like to buy when stocks come down. And with chart day, we look at hundreds of charts, thousands of different charts, and you see it over and over and over again. The stock goes higher in the short term. You zoom the lens out. Now, here's the thing. This trend line goes out like this. And as time moves on, the stock can certainly go higher. It doesn't mean it has to come down to this level. What can happen is it can go higher, and then that trend line keeps moving with it, and it can come back. So this is an example. Right now, the stock is $49 a share. It could go up to, say, $60, and it could come back to, say, $45 on an earnings miss, and that might be 6 months, 8 months from now. Doesn't mean it has to happen, but it happens more times than not. So this is one I would add to my watch list. You may or may not think it's a buy here. I personally would put it on the watch list and wait for an opportunity. The number one stock, according to Seeking Alpha, using this stock screener tool, is CyberArk Software, the ticker CYBR. This is a $12.35 billion market cap. It's going to be another stock in that cloud SaaS arena, so valuation might not make a lot of sense. Profitability on Seeking Alpha, a B. Again, you're going to have high gross profit margin because this is software, and software generally has higher margins. The growth is an A, solid growth, similar to the last one we looked at, 30% forward revenue growth. Not profitable, kind of in that hyper growth type stage. So it's not quite a spec stock. It's more in that hyper growth. You look at that spectrum, it goes spec, hyper growth, growth, mature growth, DGIF, DGI, and then income. That's the life cycle of a stock. The valuation on this, same kind of deal. 118 non-GAAP forward PE ratio, price to sales forward 12.72, not as high as some as we looked at. That TTM 14.05, but still going to be expensive. Short interest is about 4%. This is up about 78% in the past year. Year to date, up 29%. And you can see the range here, the 52-week range, 308, 159. It's trading at 283 today. So a lot of these charts look similar. We had this huge run up. We go back to, October of 2022, December, this kind of area a couple years ago, $113, rips up to 283, pulls back to 230. I mean, we are sitting pretty close to all-time highs here. We have come back. You can see we're at just below the 50-day moving average, still above the 100 and the 200, as well as that trend line. This R3 is $316. This is another one personally. I would do more research. We're in the exploration stage here. I would do more research. I'd put it on my watch list, and I'd probably wait for an opportunity if the stock pulls back more. I can't tell you what to buy or sell. Just give me some information to help you with your financial journey. If this video is helpful, make sure you drop me a like, drop me a comment, subscribe to the channel. Have a great rest of your day. Take care.